we shall start now. Shema, can you? Okay, تمام. Okay, let's start. بسم الله الرحمن الرحيم على بركة الله. بسم الله الرحمن الرحيم. الحمد لله رب العالمين والصلاة والسلام على أشرف المرسلين. Ladies and gentlemen, سلام الله عليكم ورحمة الله تعالى وبركاته. Today, human societies are facing very complex social and economic issues. Many social and governmental initiatives have initial targets that are still not satisfactorily achieving them. In fact, in many countries, we're still trying to solve the same issues, adopting the same old approach, and using the same sources of funding. Nowadays, with the pandemic, things are getting worse. The Sustainable Development Goals, the UN, the United Nations Sustainable Development Goals, constitute an interesting, consistent, and comprehensive framework that would help all the initiatives to work for the same targets in a more effective way. At the same time, technologies are offering several opportunities to make those initiatives more innovative and more impactful. For instance, the financial technologies in the financial markets and the systems, Fintech not only about enhancing financial inclusion, but it's also about economic inclusion. It means connecting people to economic opportunities and social well-being. 2 weeks ago, the ICDB Institute, the Islamic Development Bank Institute, and Al Ma'ali Group issued a report that tries to identify the ways to bridge Islamic finance sustainability through fintech. This report, in its first release, focused on the Maghreb region. And we have, for this occasion, we have already established a communication campaign to talk about the report and share its main recommendations and orientations. And today we're starting with the opening webinar, but other actions will come later. In next September, for instance, we'll have the first or the French release of the report will be issued, and we will have local seminars or webinars depending on the pandemic situation that will discuss the situation of each country of the Maghreb region, Morocco, Algeria, Tunisia, and we'll discuss the challenges for each country separately. And now I'll leave the floor for His Excellency Dr. Sami Suwailam, the Acting General Director of the ICDB Institute, for its welcome speech, remark, and comments on the report and on the initiative. The floor is yours, Dr. Sami, please.
Thank you, Dr. Ahmed, and thanks to the team at Al Ma'ali, Dr. Ma'al, and all the esteemed participants in this webinar and in this project. When Ali proposed the Islamic Development Institute, at that time it used to be IRTI, Islamic Research and Training Institute, that we would like to work on a report on how fintech could bridge the gap between Islamic finance and sustainable development goals. We thought that was a very interesting project, and it will address many issues that the Islamic Development Group and our member countries are concerned about. So let me just a few. I'm doing the first part of the Maghreb version of the report, and I congratulate the team from Al Ma'ali and from the ICDB Institute, Dr. Salman Sayari in particular, and the rest of our team for working hard for these 2 years to produce the report. As we all know, the Islamic finance industry is now growing, and during the pandemic, actually it grew by, on average, 10%. Assets are grown by 10%. Still, double-digit growth in the industry. It is not too far from the $3 trillion worldwide size, but still, from some perspective, it is still short in meeting the challenges of the member countries. And this is not a problem facing the Islamic finance industry alone. The finance industry in general, which is about $200+ trillion worldwide, is also facing the same problem. And that's why the UN, as Brother Ahmed mentioned, they took the initiative to propose the Sustainable Development Goals the initiative was endorsed in 2015 in Addis Ababa. But that was also a continuation of the Millennium Development Goals before. So we are all facing the same problem, that purely commercial are not in harmony with the environment, is not in harmony with the community, with sustainable development, with sustainable progress, sustainable prosperity of our community. So we are all facing this challenge, and this is where fintech or financial technology could be of great value. Financial technologies have been growing at a very high speed in the past decade, since 2008, since the global financial crisis. It has been growing exponentially. And one reason, of course, for this growth is the disappointment that many people worldwide have after the crisis. The crisis meet the expectations of the users, of the clients, of the societies worldwide. So these technologies have been developed and have been growing at a very high rate. And the most recent example is open banking, where many countries of the OIC member countries have officially endorsed. Now with open banking, the bank is no more the sole controller or have a monopoly over the client. So you could be a client of a bank, sorry, but you could get services from other external service providers, particularly startups. So you could have a startup fintech company that offers services to clients without being a bank. Digital banks are exploiting this, so they are designed from the ground up to be open banks in a way that will make the customer get the best of all worlds. The customer could choose whatever services that fit the needs and the aspirations of the customer. Blockchain technology is very helpful in systematizing transparency, authenticity, and immutability of transactions. And crypto assets might change actually the nature of financial arrangements. Now, fintech and Islamic finance, there are many aspects that they seem to fit together. Islamic finance depends to a large extent on trust. All economic transactions require trust. This is no question about this. But many Islamic finance, they need trust more than others, like Musharaka and Mudaraba and so on. Now, the blockchain technology is very helpful in this regard because it is considered as a trust machine. It's a way to systematize verification of the transaction in a manner that will reduce the need for human trust and make it more automated. Decentralization. Now, in Islamic finance, we talk about risk and risk sharing, but really risk sharing is basically risk decentralizing, right? Share risk is to decentralize risk. So risk sharing is basically risk decentralization, and the blockchain is very good at decentralization because it is a distributed ledger technology. So there is no no centralized control over the data. It is decentralized and collectively verified. So this can be very helpful in decentralizing risk, and therefore distribution. The distribution of risk will be more likely to be wider and more efficient, unlike conventional derivatives, which contrary to claims, in reality, they tend to concentrate risk rather than to dilute risk. And finally, reputation is very important in economic activities, and in particular in Islamic finance as well. So the blockchain technology, again, is very good in building records that from which you can build up trust and reputation. So you can buy reputation through technology. So trust, transaction, and reputation are aspects of economic activities in general, and Islamic finance in particular. And fintech could be very helpful in achieving these objectives. Now, as I mentioned, that the Sustainable Development Goals have been developed to address the over-commercialization and narrow thinking of market-based or purely market-based economies. And they are in general in line with the objectives of Islamic finance. Now, these SDGs are mostly concerned with the real sector. For some reason, the SDGs have nothing to say about the finance or the financial sector. So we think that Islamic finance is more equipped and more prepared to adopt sustainable development goals compared to conventional finance. Now, of course, to align finance to serve and to finance activities, technologies require technologies. For example, you could have, you could link the transaction to SDGs by using smart contracts that will accept only those transactions in which the two parties are already registered or authorized or verified to be service providers in line or consistent with the SDGs. So just to conclude, technology is a tool. It's not an objective. It's only a tool to achieve objectives, and we think that sustainable development in general is a very valuable objective to help our community sustain the resources. And there is a strong synergy between SDGs, Islamic finance, and innovative financial technologies. We hope that this report will step into the exploration of this potential synergy between these areas. Thank you very much, Brother Ahmed. Assalamu alaikum wa rahmatullahi wa barakatuh.
Thank you very much, Your Excellency, for your welcome speech. Well, Dr. Sami Swilem presented a little bit the context of drafting this report and how Islamic finance can contribute in achieving those SDGs, the UN Sustainable Development Goals, through fintech. Thank you very much for your welcome speech. Well, before moving to the next step, I would like to thank all our partners that supported the report, started with the Bank Al Yusra in Morocco, Omnia Bank in Morocco, and also ITS from Kuwait. Now we'll focus on the report and the recommendations and conclusions. And before discussing the recommendations with our guests, well, let me welcome Dr. Wael Aminu, Al Maali Group CEO, who will make a brief presentation of the report and the methodology that was adopted, and also the recommendations issued for the region. And also, I would like to welcome Dr. Dalal Assouli, Assistant Professor of Islamic Finance at Hamad bin Khalifa University in Doha, Qatar. My friend and brother Mohammed Sawaf from Toronto. He is a fintech startupper in Islam, and who is involved in the fintech in this region. So the first step is I will leave the floor for Dr. Mohammed Wael Aminu to make a presentation of the report, the methodology, recommendations, and conclusions of the report. The floor is Dr. Wael. If you can share if your presentation, you can share it. Thank you.
Sure. Bismillah ar-Rahman ar-Rahim. Salatu wassalamu ala Sayyidina Muhammad wa alihi wa sahbihi wa sallam. Dear participants to this event, I'm really glad that you accepted, for the panelists accepted our invitation, and we hope, as Dr. Swilem mentioned, that this report will be an addition, and a good addition to what is now discussed as the future of Islamic finance globally and especially in the region. Let me share a brief presentation on the on the report's main recommendations and takeaways. All right, so it's going to be a very short presentation, but because we would like to have more focus on the discussion, but let me just highlight the main takeaways from the report. The report begins by highlighting some of the sustainability issues in Maghreb countries. And in the report, we chose some SDGs. And so let me just briefly touch upon some SDGs that we discuss in the report. The first one is climate change. Obviously, this is a global threat, but Maghreb countries are more exposed to this. And last week, we have some cities in Maghreb region recorded record temperatures. And that was really, for me, scary because the last highest temperatures were just recorded like a few years ago. So it seems that there is this trend of global warming, which affects the region, not only from an environmental standpoint, but also from social and economic perspectives. So climate change is definitely one of the major issues we're facing in the region. The second issue is unemployment. And this issue is being getting more acute with the COVID crisis. And we've had a lot of protests in the region. Most of the protests are centered around getting jobs and tackling unemployment. So unemployment is definitely one of the most important social issues in the region. The third issue is inequality. Inequality means that we've been seeing for the last 20 years a widening gap between the have and have-nots. And this gap is getting wider and larger. And this is not only related to income inequality, but it also related to access to basic services like quality education, like healthcare and so on. So inequality is also one of the social issues we're having in Maghreb countries. Finally, quality education is definitely one of the issues we also face in Morocco, Algeria, and Tunisia. And this is related also with inequality, meaning that a small chunk of the population has access to a good education system, but the majority of people, they have access, but the quality is somewhat questionable. And this creates and reinforces, by the way, inequality in the region. So those challenges, those are just a selection of challenges the report begins with. Then the question we have to ask here, why should Islamic financial institution tackle those challenges? Actually, there are two main reasons. There is a moral justification and then economic justification. The moral justification is related to the fact that these institutions are present in this region. So normally this institution should be concerned with those issues. The second aspect is that, as all know, the ethics is part of the DNA of Islamic finance. When we talk about Islamic finance, we're talking about Sharia. When we talk about Sharia, ethics is one pillar of the Sharia. So because of this ethical ground, it is natural that Islamic financial institution to be concerned about addressing those challenges. So this is from a moral standpoint. From an economic standpoint, there is an economic justification, meaning that addressing sustainable development goals and addressing the issues I have just presented and other issues stems from also has an economic justification, meaning that there is a demand from customers. So customers are asking for more social involvement. There is a business opportunity, meaning that we can, while addressing those challenges, we can also have like a good financial returns, as we say, do well by doing good. That's possible in the discussion with our experts, who will certainly touch upon this. And finally, we can scale. If we develop like business models that can address some social issues, we can scale them. So it offers a wider business opportunity. So again, there is an economic justification and also a moral justification. So far, there are limited supply of initiatives around social finance, unfortunately. But in the face of this limited supply, we have huge needs. And those needs are growing over time, especially in the current COVID context. So there is a mismatch between what financial institutions are offering today. And by the way, not only Islamic financial institutions, all financial institutions, as Dr. Suhail mentioned. And on the demand side, there is a huge need. So there is a mismatch between the supply and demand from that perspective. in our analysis of this report, we started, if you look at the report, we started by a fishbone diagram, which is a diagram that tries to map the problem with the causes and the sub-causes. So the issue of the lack of involvement is one of the issues we're trying to, lack of involvement in sustainable development is one of the issues. And in the reports, we identified many causes and sub-causes. We have causes related to lack of scale. We have causes related to the fact that Islamic finance ecosystem is still under construction. And this is true because Islamic finance is somewhat not very old in the region. We have issues with regards to governance in the financial institutions. And finally, we have a lack of innovation. So the report addresses just two sub-causes in those all causes that is presented in this diagram. The first sub-cause is how to embed social, environmental, and economic development into IFS, Islamic financial institution business model. And the second sub-cause that the report addresses is the adoption of innovative digital technologies. So we think that those two sub-causes can lead to a better involvement of financial institutions in the sustainable development goals. So as far as the report also obviously talks about fintech in section 3 or 4. And in the report, we have what we call the fintech paradox. And this is quite strange in the region because the region has all the ingredients to be a leader in fintech. We have a young population. We have a digitally oriented population as well. We have a relatively low financial inclusion. Around like 1/3 of the population has access to financial services. And finally, we have a large diaspora abroad struggling with the high level of transfer costs for remittances. So those elements normally supports fintech development. However, we still have like many fintech barriers, which explains the level of fintech in the region. The first one is the internet quality, availability, and cost. The second aspect is the preference for cash, and this is related to the informal economy. As you know, in the region, the informal economy sometimes, if compared to GDP, it's more than 1/3, and sometimes more than this ratio. And for like informal employment is more than 50%. So this informal economy normally prefers cash rather than like formal financial transactions. The third aspect that hinders fintech is the structure of financial markets. In the region, in the Maghreb region, most of the financial market is geared towards banking, and we have very shallow financial like capital markets. And of course, my brother Mohammed Sawaf can talk about that. I mean, access to financing for startups does not come from the banking sector. It rather comes from the capital markets. And finally, the legal and the regulatory framework is for fintech is still under construction, which limits the fintech development capabilities. And Dr. Suwailem, in his introduction speech, talks about like open banking. We still don't have open banking policies in the Maghreb region. As far as the recommendation goes, we came up with the 7 main recommendations. Of course, every recommendation is explained in detail, and I won't go into the details of each recommendation because that will be the next step of our webinar. But let me just present briefly the recommendations before moving to the next part. First of all, we talked about like the importance of completing the legal regulatory framework before engaging in more complex policies. And this is true because we see even for Islamic finance, the regulatory environment is not complete. If we talk, for instance, about refinancing and interbank markets, it's not there. So we still have a long way to go before completing even the basic legal and regulatory framework. So that should be a first step. The second one, we talked about sandboxes, and we'll go back to sandboxes as a policy tool to foster innovation. We talked also in the report about innovation lab and accelerators because it offers guidance and support for fintech companies. The fourth aspect is related to taxonomy, because one of the issues we have in social and green finance is green and social washing. So how to prevent social and green washing has to be done through developing a unified taxonomy with regards to green and social finance. The fifth aspect is capacity and skill building for both regulators, banks, and all stakeholders in this fintech ecosystem. So that's extremely important. The sixth element is, it can seem like a basic recommendation, but this is extremely important because we've seen that one of the key determinants of financial inclusion is financial and technological literacy. So if clients are not aware of all the possibilities of technology, they might not use these possibilities. So financial literacy is extremely important. And finally, open banking, as Dr. Suhailem mentioned, is extremely important to foster innovation and not to limit the innovation only to financial institutions. So it's rather, we call open innovation, meaning that startups and technological companies, telecom companies, along with financial institutions, can collectively innovate in the service of customers. So those are like the main recommendations. And in the next parts of our webinar, we'll discuss this in more details with our experts. Thank you very much. Back to you, Dr. Ahmed.
Thank you, Mr. Wael. Thank you for your brief and concise presentation that summarized the report. Now we'll have a dedicated session for a Q&A, for question and answers. But before, we would like to deepen our understanding and to discuss the recommendations that were issued in the report. So we'll discuss not all the recommendations, but we selected some of them. The first part the first recommendation that will be discussion is the legal and the regulatory approach. I mean, today in different countries in the world, there are different approaches. Some countries are open. I mean, if you have a new innovation, you can try it yourself, and you have to manage and to handle all the consequences. There are some countries where there are I would say not so flexible, but they have sandboxes, they have special environment to test new ideas. And there are some countries who are locked. I mean, they have the regulation very tough and very severe. I mean, if you have a new innovation, you have to wait for a regulatory text and the regulatory framework before introducing your innovation. So, I mean, the legal and regulatory frameworks constitute a real accelerator for fintech if they are if we have an interesting framework. So I'll start with Brother Muhammad Sawaf to ask the first question about how important the legal and the regulatory framework to encouraging fintech and SDG initiatives. The floor is yours, Muhammad.
Barakallahu Fiqh. Thank you very much, Dr. Ahmed and Dr. Wael and Dr. Sami, as well as Dr. Dalal, for having me on here. I believe that the regulatory framework is very important, and I think it definitely starts at the top level of government, right? Because if there isn't that political will to enable innovation, to enable disruption within financial services, then it becomes very difficult for texts, as you had mentioned, to be created and put into law, and of course, you know, you then don't spur economic activity within this sector. I find it, you know, very much similarities between Morocco, especially, and Canada, especially with, you know, a population of just close to 40 million. You know, Morocco is considered a developing country, where Canada is a developed country. But when you think about Canada and, you know, its banking sector, where it's a stranglehold between 6 banks, right? It's very oligopolistic, and they're the ones that are pushing against open banking initiatives. They're in the forefront and lobbying against, you know, innovation. And if there are new startups or fintechs that they feel threatened by, they just buy them out and then they shelve them, right? So you have not only the private sector, but the public sector working against, you know, creating a framework under regulation, and basically stunting growth within this. So I think it really needs to come from the top. Government needs to push it, and we also really need to focus on the red tape that is involved, because, you know, my understanding that in the Maghreb region, it can take several years, you know, from beginning to end for a political text or regulatory piece to be adopted. Now, in Canada, it may not take as long once it gets to the stage of Parliament, but I think at the amount of time that it can get to actually get there is where the red tape can be reduced. So hoping that those who are in a position of politics or can push this narrative forward can really help innovation within this sector flourish.
Thank you, Brother Muhammad. It's very interesting insight. Well, you emphasized on the overprotecting incumbents limits the fintech innovation and fintech growth. At the same time, you talked about something that is very important. It's not only about the regulatory framework that needs to be adopted, but also the time to market. The innovation cycle in the technology is very fast, and we need cycles or regulatory cycles to be as fast as innovation cycles to move forward rapidly. In the Maghreb region, let me give just some ideas. In Maghreb region, in Morocco, for example, we have 3 banks that are dominating the market. They have more than 76% of the global banking market. In Algeria, we have the state-owned banks that are dominating the market. In Tunisia, we have small banks, and their challenge there is to create big banks to have a real impact on the economy. So we have the same region with different challenges, but the main challenge is how to introduce fintech in the financial system. Well, now I move to Dr. Dalal Assouli. Well, the same question: how those regulatory and legal frameworks are important to encourage SDG initiatives. The floor is yours.
Thank you, Dr. Ahmed. First of all, I would like to congratulate the Mali Group and the Islamic Development Bank for this very insightful report, which for sure will support policymakers in redirecting their focus or their strategies to some key recommendations that you mentioned. And I would like to also thank the team in this, the distinguished panelists with me on this, for this interesting webinar. That's a very important point that you mentioned, and I will start with the first gap that maybe Dr. Sami mentioned at the beginning of his speech, which is the SDG gap, because this is actually the starting point. What are we aiming to achieve, and then how are we aiming to achieve that, and what is our target, basically customer base or investor base that we're targeting. So clearly, before the COVID-19 pandemic, there was about $2.5 trillion in annual financing gap for the SDGs. And that has further been increased after the pandemic by about $1.7 trillion. What does that mean is that we need to engage the private sector, being it startups or fintechs or financial institutions, etc., in mobilizing this financing gap. And if we look at the key fintech areas or focus areas today globally, when it comes specifically to Islamic fintechs, there are about 241 fintechs, Islamic fintechs globally. We find innovations when it comes to funds mobilization, to deposits, to wealth management, to insurance, very little on social finance, as Dr. Wael clearly mentioned, and then payments, and of course, digital assets. And across these categories, we see clearly many gaps when it comes to the MENA region across all of these categories. Now, how is the legal and regulatory environment important? And I do agree with the previous speaker in the sense that it requires a top-down approach. And we notice that in the jurisdictions where we see most of these innovations, these are jurisdictions where the regulators have been involved in the development of regulations and facilitating for example, the establishment of frameworks for Islamic fintechs, either sandboxes or through, for example, incubation centers or entities, etc. And you clearly see that in jurisdictions like, for example, Saudi Arabia, Malaysia, Indonesia, etc., and recently with some developments as well in Qatar. And another aspect that I would like to add is we have, of course, the legal and regulatory side when it comes to both fintech and SDGs in general, or sustainability integration in general, but we also have the supranationals role. And I mentioned here specifically key pillar institutions in the Islamic financial industry and what role can they play typically when it comes to specific Sharia standards from the AWOFI or even certain guidelines from the Al-FSB. The recent work that is also being done by the Sibaki when it comes to the implementation of sustainability working group. Now, specifically talking about sustainability, just to add on to the previous discussion on fintech, because fintech is an enabler for the integration of sustainability. And in the previous opportunities that Dr. Wael mentioned, he spoke about remittances, for example, where this is the clear challenge for the region in terms of transferring remittances, which are too costly right now, and we do not have efficient solutions that are competitive but also easy to use, because we spoke about the millennials or the young population, which requires fast and competitive services. Now, sustainability integration to avoid the issues of greenwashing and also markets. And that provides more confidence to private investors, private sector investors, going back to the SDG financing gap and how can we engage in the private sector. So having in place clear frameworks, labels, what qualifies as green, what qualifies as social, as blue, etc., that helps provide more confidence to impact investors, because we're clearly targeting a specific investor base, which is impact investors. In addition to Islamic investors, which I would say not all Islamic investors are impact investors at this stage, unfortunately. So one of the key challenges would be in the future to have Islamic impact investors. And we've seen in other countries, and again, when we have a top-down approach, examples in China with dedicated sustainability frameworks, in Indonesia also with dedicated taxonomies when it comes to qualifying green investments, but also sub-green investments when it comes to specific sectors. And that addresses, for example, the challenges when we talk about, for example, clean energy, but also we have issues when it comes to clean transportation. In Morocco, for example, agriculture is one of the key sectors. And I would add one of the challenges, in addition to the ones you've mentioned in the report, which clearly reflect the challenges under the SDGs, but also post-COVID, which is food security. And therefore, there is a need also to revisit how governments allocate their financing or national budgets to these areas, and leveraging on, for example, fintech innovations and putting in place the necessary regulations, but also the ecosystem to allow fintechs to innovate and develop solutions that target also sustainability objectives will clearly redirect financing towards those sectors.
Thank you very much, Dr. Dalal. But one of the main gaps that we've explored in the Maghreb region is that the financial system is more focused on banking sector, while sustainability and even fintech financing or fundraising is based on capital markets, and this is a real issue in the region. Well, the second recommendation that the report discussed is the setting up sandboxes. I think the only country in the Maghreb region that have already a sandbox framework is Tunisia. Algeria and Morocco are lagging behind, but for sure setting up sandboxes would contribute in encouraging fintech investors and initiatives. Let me go to Dr. Muhammad. What is your insight about sandboxes as a fintech investors? Do you think that sandboxes constitute a real opportunity for those fintechs? And what are the conditions to have a good sandbox, a very effective sandbox? Please, Doctor.
Yes, thank you, Doctor. When it comes to fintech sandboxes, so especially here in North America, we've seen fintech sandboxes within the regulator level, and then of course in the private sector, but mainly in the big banks that have legacy systems that are trying to innovate. And most of the time, what I see is that there are restrictions when it comes to these sandboxes with respect to access to the systems or the back offices, especially with the banks. You know, I have conversations with many startups or fintechs that are in these venture labs, these incubators or accelerator sandboxes within the banks. And they tell us that the banks don't even give them access to, you know, their back office because, you know, nobody wants it to be touched. There's too many legacy systems involved. So it's having a sandbox for the name of having a sandbox without actually creating an environment or an ecosystem that allows for innovation, that allows for you know, new developments within the sector. And I think even on the regulator side, they're not advertising it. They're not pushing for it, right? They're saying that it's there, it's available, but they don't really want to invite anyone to participate. And I think that is a big hurdle that needs to be overcome, especially when it comes to the fintech sector. Because at the end of the day, if you're not getting all levels of government involved and pushing for innovation in the sector, then how can you the private investment sector to startups to be that whenever anybody says that there's sandboxes available, because especially when it comes to very highly regulated environments, as we see here in Canada and across the world, it's really only by name and not by practice, as they say.
Yes, very interesting. Even in developed countries, the concept of sandbox needs more maturity. I think this is something to explore in our region, of course, and of course we need to learn more about the other sandboxes to put things in an effective way. Dr. Wael, do you have any comments, additional comments to this?
Yeah, sure. This is just to add on what Madam Mohammed said. I mean, when it comes to regulatory environment, there is a sweet spot that we need to find, and this is extremely important. We have an objective of ensuring the stability of the system, the financial sector. So that's extremely important, and this is one of the mandates of the regulators. So stability. Yet at the same time, we need to also to have development and to foster innovation. So striking the balance between those two, sometimes two contradictory, sometimes objectives, is sometimes challenging. But the sandboxes have this objective of like allowing innovation while being under the supervision of the central bank or the Securities Commission and so on. So that's so this is in theory, as Brother Mohammed said. In theory, this is the rationale behind, and this is actually a good rationale because, as it was mentioned before, the regulatory cycle is very long. So it can take years to get a bill approved. And we had this issue with crowdfunding in our region. I mean, started discussion in 2017, and it was only like a few months ago that we got the final bill. In the meantime, the context of crowdfunding globally has changed. So from that perspective, having sandboxes as an innovation policy is extremely important. Of course, the devil is in the details. We have to see how it works and so on. We have the experience of Tunisia, but Tunisia has just started, so we don't know what would be the outcome of such policies. But I do think that this is a kind of like an important step regulators have to take to be open to fintech, to innovation, and also to foster the dialogue with fintech companies that we don't have this before because the regulator is working on his side, and the fintech companies are also struggling to get business done. So this areas like the innovation lab as well is kind of like a bridge between those two. But of course, this is a learning process, and it's definitely not easy, but we have to start somewhere.
Thank you, Dr. Mohammed, Dr. Wael. In fact, in Morocco, we specifically in Morocco, we find out that conventional banks or the conventional banking groups, they have their own digital factories. Means they have their own program to digitalize their services, their financing products, etc. And every bank is considering itself as an empire isolated from the other empires. even between conventional banks, they are not trying to collaborate. And sometimes, even if sometimes some of these conventional banking groups, they have their own Islamic bank, what we call here participation bank, and they are not even integrating them automatically in their programs. So now, even the approach of innovation labs, of sandboxes, we need really to make the introduction of fintech more effective. I don't know if Dr. Dalal or Dr. Sami have comments on this part.
Yes, sure. Thank you. I think this is a very important point that you mentioned, because clearly there is need of awareness also among the financial institutions, because as you mentioned, there is a lot of digitalization initiatives, and we've noticed that because this is the way forward and this is the future of the industry. So no bank today can survive in the future without establishing or digitalization initiatives for some of the services, of course. Now, in the past few years, there have been misunderstanding that fintechs will, in a way, negatively impact the business or the activities of financial institutions, and they were looked at in a way as competitors. Rather, it should be looked at as a kind of collaboration, as you clearly mentioned, in that fintechs could further digitalization initiatives of banks, but that requires more collaboration, which could be facilitated through sandboxes in a way that that box would act as a layer between the banks and the financial institutions. What does that mean clearly is that in the digitalization initiatives you mentioned, if a bank would want to approach, let's say, different fintechs on its own, that means that the bank would need to share the same information with each of the fintech companies or service providers. However, that's facilitated or dealt with when going through a sandbox, because then that will enable providing in a way a ready process information in terms of the transfer of information to sandbox, etc., in terms of understanding the needs of banks or the financial institution in general, and developing the solutions, testing them, assessing if there is a market need, and also looking at the regulatory aspect. And most importantly, referring back to what I mentioned, is all of this is under the supervision of the regulator, which is very important. We have seen in other countries where there have been some, for example, some innovations around cryptocurrencies and all, and at the end, the regulators came back and said, okay, we do not act, for example, crypto assets. So all of that work has been, in a way, wasted because it was not done under the supervision of the regulator. So I would say that this should be looked at more as the collaboration, in addition, of course, to the other enabling factors or enabling initiatives, such as, for example, you have angel investors, you have incubation centers that would provide all the support and the capacity building to fintech startups when it comes to understanding the market demand, testing the solutions, developing other skills when it comes to, for example, developing a business, entrepreneurship activities, etc. And we have seen when you have all of these ecosystem and infrastructure in place, so you have the sandbox, you have the incubation centers, etc., that of course facilitates the not only the development of innovation, but also scaling up the activities of the startups, because now the challenge, of course, is to launch the innovation, but how do you ensure that that business model is sustainable over the years, and how do you scale up the activities to perhaps target other geographical zones? And that's what, for example, a sandbox together with the other infrastructure, as we mentioned, would support fintech startups.
Thank you, Dr. Dalal. Dr. Sami.
Thank you very much, Brother Ahmed. Thanks to Dr. Dalal and to Brother Muhammad and Noel. I think it's a very interesting research area, the three challenges facing innovation, economy in general, and digital finance in particular. As a matter of just brainstorming, I think it would be a good opportunity for multilaterals to join to support those developing countries that would like to explore or develop these aspects of their regulatory environment to support the startups and to support the innovation. Now, for developing countries in particular, it is not a matter of innovation for the sake of innovation. It's a matter of employment at the end of the day. And unless we create new opportunities for the youth, then the economy will be facing, in my opinion, and as well known, the economy will be facing serious challenges. One other aspect, if you allow me, Brother Ahmed, is that we have to be sure not just to copy the same green bonds and then green sukuk, blue bond, blue sukuk, yellow bond, whatever. I mean, so I hope that we are able, or we will be able, to apply the new technologies in a way that really taps the strong potential of Islamic finance. Otherwise, if we take existing Islamic financial structures that are quite complicated, right, and quite complex, and on top of these complexities, another layer of blockchain and so on and so forth, this will not add value. This actually will make it more complex and will make it more costly. So we really have to avoid this labeling game. We have to find ways to really be ahead of the market rather than just keep our role as a follower. I mean, in the past 30 years, it's okay to be a follower. You cannot continue to be a follower for the rest of our lives. Thank you very much.
Thank you, Dr. Sami. In fact, during the discussion, there were two main concepts that have been discussed: collaboration and supervision. I mean, every innovation needs to be supervised by a central bank. It gives trust to the users. I remember once Uber was launched in Morocco, I waited for 2 years to use it, and I needed some assistance. And the friend that assisted me is watching me now. And this is just because of trust. I mean, I need some supervision to say, okay, the application is safe and you can use it safely. So supervision is necessary. Collaboration also. Now I turn to Brother Muhammad to ask him today, as a fintech investor, how do you imagine an optimal collaboration with banks, with the financial institutions? Is it possible, and how do you see this future? Would we move to more collaboration between incumbents and fintech startups, or not? Okay.
Very good question, Doctor. I think it really depends on the local environment and the type of let's call it banking infrastructure industry that is available. So, you know, in Canada, again, I said we're very oligopolistic. You know, the industry is managed or controlled by 6 major banks. Whereas if you go south of the border, you have almost 1,500 local, state and federal banks. And so innovation and partnering with those types of banks is a lot easier because there's a competitive nature, right, to provide better services, to be digitally oriented, and you can win on those aspects. In Canada, it's dwarfed in that aspect. There isn't the willingness, right? The willingness is not there from banks to partner with innovative solutions, smaller players, right? And if we think about the sector in and of itself, even when it comes to the regulators, the regulators don't have this approach of partnering. It's more of, okay, you're new, we don't know anything about you, let's audit you, let's figure out if you're doing something wrong, and you're trying to prove yourself that you're doing everything right within the legal framework. And if it's something outside, then they basically put you on hold and say, okay, well, you need to shut down right now. We don't have, you know, a regulation or a framework around what you're doing. And until we can figure that out, you know, it basically stops what you're trying to do. And so, you know, partnering with banks is definitely a really good way, because they have the back office, they have the infrastructure, they have the compliance and regulations in place, and can ease the relationship between you and the regulator. But at the end of the day, there isn't a willingness, right? Again, you know, we're in a very unique situation here in Canada. And I think there are many countries around the world that are experiencing very similar situations. And there generally needs to be this open-mindedness that, you know, open banking is here. It needs to be adopted. There needs to be more collaboration between the big and the small, and as well as continuous working groups in all areas, right? You know, the same can be said for crypto. Crypto is still, you know, not 100% adopted, right? They may adopt the larger coins, the more stable coins. You know, some of these exchanges, they start and then they get shut down after the fact, again, because they haven't really figured out what they want. They don't understand what they want. And going back to the point of these sandboxes, you know, you can create a sandbox, but if you don't have a license available for that individual startup, well, there's no need for what does the sandbox do then? Like, you don't get to transition out of the sandbox and say, well, now you have a license that you can put or attract or adopt and be able to do this on your own, right? So there's many limitations in the marketplace that don't allow you to execute from MVP into a scalable or growth type model. And there's many levels of cooperation required, not only from the public sector, but as well from the private sector, in order for those partnerships to be enabled and to be you know, adopted and find really that true growth and scale as required.
Thank you, Brother Muhammad. Before moving to other questions and other recommendations to discuss, I would like to remind the participants to write their answers in the QA module in Zoom, so that we can answer them at the end of our discussion. Now, during the discussion, and even in the report, there is a gap. We find out that there is a gap between the innovation cycle and the regulation cycle. I mean, central bankers, financial authorities take a lot of time before issuing a regulation that is adapted. Sometimes, like Dr. Wa'il mentioned, in the crowdfunding regulation, it took 4 years to have a specific legal framework for this activity, while the crowdfunding is has known during the last years deep changes. So now, I mean, one of the recommendations that were issued in the report is the capacity building of regulators and the different stakeholders to enhance technology adoption. I mean, I need to train those, I would say, the central bankers, the financial authorities, to understand better the technologies, their consequences, the impacts, etc., so that they can accompany those or this innovation cycle in a proper way. So I will go back to you again, Brother Muhammad, to talk about the capacity building of central bankers or financial authorities and how it can make things easier for fintech startups. Yeah,
absolutely. I think one major thing to keep in mind is the type of government that's in place, right? So when you have a cyclical government that can be term-based, as we do here in North America, where terms can be as little as 4 years and up to 8, sometimes 12, that can definitely have a hindrance on the capacity building, because when you have one government that may push for innovation and, you know, growth in a particular sector, especially finance, and they want to increase adoption and capacity, a new government may come in and have a completely different agenda. And so I commend countries like, you know, KSA and the GCC regions, even, you know, the Maghreb regions, where, you know, they have more stability at the government level, where there are these long-term visions. You always hear of, you know, Vision 2030, 2040, 2050. Increase outlook, that even, you know, if there is a new government that comes into place, that there should be continuation to see that growth in that sector, because it isn't a quick fix solution. These are long-term government policies that need to be adopted, and there are many stakeholders at play in order for that to happen.
Okay, Brother Mohammed, last time when we were discussing, you told me that the absence of capacity building programs at the regulatory levels, it has a cost for fintech startups. Because every time you have to justify
Yes.
yeah, if you can explain that, because it is very relevant.
Yeah, no, absolutely. So at the end of the day, when there is, you know, there are a lack of resources when it comes to financial authorities or central banks or regulators to monitor and to engage and to participate with fintechs. You know, most of the resources are dedicated towards the incumbents, the stronger players in the marketplace. And if they decide to, you know, sit down with you and talk to you, it always comes at a cost, right? Because, you know, there are legal teams that need to be put in place in order to answer their questions. And the cost on a per hour basis is the same cost that it would be for a bank. You know, there isn't this startup rate, you know, $100 an hour for you because you're a startup versus $1,000 an hour, you know, for the regular banks. It's $1,000 an hour for whether you're a startup or a bank. And, you know, that can financially cripple some fintechs at the end of the day. They may not have the resources to be able to support those regulatory conversations. And these aren't negative conversations, these are positive conversations, especially like Menzel, where Islamic finance framework has not been created. We're working within the current framework, but once you start to add these other elements that they don't have control over, especially on the Sharia compliance side, and you're marketing yourselves to a community where they are heavily focused on consumer investor protection, right? And so you don't want to, and they may think that you're running into statements that are not compliant, that may materially affect some of these investors. You know, these discussions need to take place, and it comes at a cost. And if you don't have the financial resources in order to do that, then of course it becomes a big burden. And so there needs to be increased capacity building from these authorities, from these regulators, to ensure that they have enough resources to be able to handle these types of situations at a reasonable cost, or even free, let's say, to better understand what is out there, right? Because when you don't have those resources, decisions are made quick without, you know, without the proper information and data to support it.
Thank you, Brother Mohammed. Dr. Wael, do you have any additional comments on this topic?
Yeah, this is definitely an important topic. And for me, this is about having a common language between all stakeholders, the regulators, banks, startups, all stakeholders involved in this process to have the common language. And it seems easy, but as Brother Mohammed mentioned, it's not that, because the topics are quite complex. And I should add that myself, as I'm an IT engineer by training, but I'm finding personally a hard time like coping with the new developments, because you need, each time you have blockchain, you have AI, artificial intelligence, all those new technologies are easy to understand. So you have to invest time to learn the details and the specifics of those industry. So the same is true for someone like as a lawyer by training, or like economist and so on. So this is not like an easy thing to do, But investing in this capacity building is extremely important, because you can't move forward without having this common language and talking about the same thing.
Yeah, this is very interesting. And think about talking about capacity building, because in the report, in the fifth or the fourth chapter, we presented many case studies, and many of them are very interesting, because it's not only about one technology; it's a mix of technologies, which makes the I would say the issue more complex. For sometimes we have blockchain platforms with AI algorithms that are working, and with IoT, so things would become just hard to understand from the regulatory standpoint. So capacity building is very interesting to move forward faster, because a mix of technology can solve better those problems, and understanding them will make things easier. Dr. Dalal, Dr. Sami, you have any additional comments on that?
That's a very interesting aspect, and talking maybe from the perspective of what academia can do. And also I'm glad that Dr. Sami mentioned earlier the role of the multilaterals, which is a strategic role, and because they have also a very, I would say, an excellent technical initiatives to member countries, and perhaps dedicated initiatives to fintech and also to sustainability would need in the future. And as you said, it's the multi-stakeholder need, I would say, and responsibility to develop capacity programs. So you spoke about regulators, and clearly from their perspective is the nature of risks that are basically posed by those fintechs, innovations, and also when it comes to sustainability initiatives and how these would impact. So this would be the main focus from a regulatory perspective. And clearly understanding the nature of those risks and how to analyze them, and how to basically assess them will help speed the review process or the challenges that Mr. Mohammed was mentioning earlier when it comes to supporting innovation, and also providing necessary licenses and approvals, etc., for fintechs. Now, there are other stakeholders. There's also the Sharia scholars in reviewing those structures. You mentioned earlier the complexity of certain technologies, and clearly there is the legal firms who, when preparing the related legal documentation from a transaction perspective, there's also auditing firms and all the assurance services that are provided there for fintechs, but also for sustainability companies. You also have on the demand side whether the customers or investors are educated enough to understand those products and those innovations, because clearly we have to start from the starting point is, what is the purpose of all of these innovations? Is enhancing customer experience, number one, and also mitigating the financing gap for development challenges that we discussed earlier. So anything that supports achieving those objectives should be basically facilitated by all these stakeholders, including capacity building. Now, who is responsible for capacity building? Clearly, there are multi-stakeholders. There's also, as we mentioned, supranational, multilateral institutions, or DFIs in general, which have a critical role in supporting their member countries on how to develop, for example, their financial sectors, how to develop, we spoke earlier about the underdeveloped financial markets in general for a lot of developing countries, in integrating sustainability objectives, not only at the financial institutions level, but that starts at the government level. So that should be included, for example, in national development plans of each country, in line with the commitments to the sustainable development agenda, etc., and then declining them in terms of operational objectives at the institutions level. But there's also academic institutions. We see very rare, for example, fintech-related programs now in institutions talking about, let's say, the MENA region or at the OIC level. There are some institutions that have taken the lead in terms of developing programs. But as you clearly mentioned, we live in a very fast-changing world, and every day there's a new technology that is being developed. So with all of the changes, clearly, I think academic institutions supported by regulators and DFIs would have a clear role in being proactive to support the market in terms of talents at the financial institutions level, at the regulators level, but also to support Sharia scholars and all the other stakeholders in the industry to be ready to welcome innovations, support them, but also implement them, which is
Thank you,
most
Dr.
important.
Dalal. In fact, capacity building is not only the matter of fintech investors, but it's everybody's business. I mean, regulators, Sharia scholars, etc. Now we move to another recommendation: financial literacy. Today, in the OIC member countries, we have a big gap in terms of financial literacy, understanding of financial services and products. And if we add 3 additional layers: the Sharia principles, technology, then the SDG becomes more complex. With gathering all these components, it becomes more complex. So it means that we need more efforts in terms of financial literacy and technological literacy and SDG literacy to make things smoother and to have a good impact in terms of society and the economy. So, Brother Muhammad Sawaf, what do you think about your experience and your understanding of financial literacy policies in Canada and in Muslim countries, and how do you think those policies can evolve to be more effective? The floor is yours.
I think this is a very pertinent topic these days, especially considering the pandemic and considering, you know, all demographics that have experienced any sort of financial situation. And we're seeing now an increased awareness that financial literacy is a key player, especially when it comes to demographics with younger populations. We are now seeing some governments focused on financial literacy programs, especially in the academic or institutional level. So at least here in Canada, they're starting to introduce financial literacy from grades 9 and upwards. But I still think that the main providers of financial literacy will still be in the fintech space. There are many fintechs, you know, when they start to roll out their own product or service or program, they soon learn that not many people understand what their product is or the service that they're providing, because financial literacy is just very, very weak. And so they introduce an education program. They roll out, you know, awareness and content and marketing that allows people to better educate themselves and understand the services and products that can enable their financial future at the end of the day. And so if governments, I think this is where the gap that a government can play is government needs to find these fintechs and support them on those journeys of providing educational awareness and financial literacy to these groups and demographics, because government alone will not be able to solve this problem. It's great that there is an increased awareness at these levels, that they're willing to support at least within the academic or educational institutions. But I think there needs to be some sort of public-private partnership around this space to enable this further.
Thank you, Brother Muhammad. Of course, today we have a tremendous gap in terms of understanding of technologies. Let me give an example, the AI. Some people, when talking about the artificial intelligence, they are imagining they have an image of robots that are controlling the world, etc. While they forget that when they are watching Netflix, all the recommendations are made through AI. So this is about the present, not the future. So I mean, normal people that are not involved in technology and in the financial sector, they don't have a good understanding of these technologies. So financial literacy and technological literacy is very important to enhance this understanding. Dr. Dalal, I don't know if you have. Wait, yes, brother. Do you have any?
I just wanted to give a little bit more perspective, because obviously I'm coming from Canada and everyone thinks that we're quite developed, but just some statistics around this. There are still 4 million or 10% of the Canadian population that is still considered underbanked, and even 1 million of those that are financially excluded, meaning they're not even participating in banking, right? So even as a developed country, we are still weak when it comes to literacy and adoption of financial services due to limitations of access, due to limitations of awareness or literacy, so on and so forth. So I just wanted to provide that color and context so that people still have an understanding that yes, even in the developed markets, this is still a huge area of concern and a problem.
Okay, thank you. So we're fine, I think, in the Maghreb. We're
Not at all.
lagging behind any. Sure. Okay. Dr. Dalal, do you have something to share?
I think this is a critical challenge, awareness and understanding when it comes to sustainability or to fintech in general, or using digital services. And a very simple, I think you mentioned the anecdote about understanding AIs, but here, if you notice, during the pandemic, because again, a lot of businesses have, were under, closed their operations or their shops, etc. Then there was a heavy reliance on e-commerce platforms. And we still notice in the Maghreb that people still prefer to pay in cash. Perhaps the same service that is provided in the West, where you have the option to pay by your credit card, you have the cash option here, simply because a lot of people still don't even trust paying with the credit card, because they would think, oh, someone else would use my card for like some fraudulent transactions and all. So clearly there is a lot of awareness to be made. And as a comparison, if you go to China, it's a cashless society, for example. So even if you want to pay sadaqah, you use your WeChat to pay sadaqah, which is a very interesting experience that I've witnessed personally. Now, having that, when it comes to sustainability, is another challenge, because some of the discussions that I faced personally, even with educated people, and you spoke about the young generation and all, is should the focus be on, for example, addressing development issues first before we talk about issues with sustainability, circular economy, and all, the related objectives. And this is clearly still a challenge today in the region, whereby you need to create a lot of awareness around, the impact of not doing anything to support basically the either the SDG agenda or all the commitments under the Paris Agreement for climate change. So I would say financial literacy is very important. That has been further actually emphasized during the pandemic, because again, there was a disruption in the way how customers deal with financial services. But the responsibility is sometimes just to simplify the understanding of services. As you mentioned, that image of thinking about AI as some a crazy robot in front of you and all, that needs to be simplified. As when you explain to, for example, I think in some countries, developed countries, you have financial literacy programs even at the kindergarten level or even at the primary school level, and very simplified in a very basic way. Similar initiatives need to be done. We have a large informal economy, for example, in the Maghreb, and a lot of these transactions are not captured today, we know, in the financial system. And even today, for example, access to smartphones, to internet has been made very cheap because of competition. So almost, I would not say everyone, but a large majority of the population owns very basic smart. And that is not needed, by the way. If you look at the example of certain African countries like Kenya, for example, with the development of M-Pesa, you only need a simple phone. The old Nokia that we used to have without any, amazing apps and all could facilitate a lot of digital transactions. So on both sides, yes, there is need for to revisit existing financial programs, because there are estimates targeting different segments. And I think this needs to be further customized to accommodate needs of every country, because every country has different segments of the population. You have farmers, for example, in Morocco, you have farmers, you have entrepreneurs, you have university students, etc. And dedicated program customized with the support of, for example, academic institutions and other partners, other governmental institutions could facilitate that objective.
Thank you very much, Dr. Dalal. In the report, just to remind you something, in the report, when discussing the financial literacy, it's not financial literacy is not only about education, but also about accompaniment. I mean, assisting people who were educated to make sure that they have a good understanding when making decisions. That's why during the report, we mentioned some cases education, etc., etc. And once you spend a penny, it is registered in this application. And sometimes there's some nudging practices when you have exceed the limit for each budget. There are some SMS texts or messages that tell you, "Are you sure you want to make this spending?" So this is a way to assist people in their and financial technologies help people with that, because to make the budget, you need some algorithms, some AI algorithm to say, well, you're living in New York or in Casablanca or in Jeddah. Here's the optimal budget for housing, etc., etc. So once you put the budget, there is some assistance to make sure that your spending is reasonable and you're not exceeding the limits. Dr. Wael, do you have any additional comments on the financial literacy recommendation?
Yes, just very quick comments on this. I mean, I think that at the end of the day, what is important for users is the user experience is extremely important. And to Dalal's and Mohammed's points, it's very important to think about who's going to use those services. So this is true for fintech, but it is true for financial literacy. I think we have to use very simple messages, also to leverage what we have today in terms of social media, fun way, especially for the youngest population. The second aspect, this is a multi-stakeholder initiative. I mean, the government cannot do it alone, academia cannot do it alone, and so on. So it has to be some kind of collaboration with a given goal. And in those Maghreb countries, we have what we call today financial inclusion strategies. And in financial inclusion strategies, financial literacy is one component, important component. So it's also important to measure it with KPIs to see what is the effects of our communication campaigns on the adoption of financial services. So it's very important to measure and also to tweak and to change our techniques and strategies to cope with the changing environment. We've seen in the Maghreb region, even though we are illiterate, even though we can say like old people, they can still use technology when they see the benefits of using the technology. That's during COVID. And also for COVID, like people in all those social media, all those apps, even though so it's possible. So since this is possible, literacy is also possible, provided we have the right way, the right messages.
But I want, again, something very important in my opinion, which you mentioned a few moments ago about the complexity of the technologies. I'm afraid that at least some regulators would fear that these complexities would hide a disaster in the making, just like the derivatives, the complex derivatives, led to the greatest crisis, the greatest financial crisis in history. So we have to convince the regulators that it has no impact whatsoever. It can be easily, the audit, the supervisory function of the regulators is not affected by how complex the technology is. They can easily review and verify and check the validity of the transaction, the ownership of the money, the ownership of the asset, and so on. That's what matters. I mean, if you have an iPhone, you don't care what kind of processors inside the iPhone, how complex is the iOS. You care of how easy it is to use. That's something we can agree on. So we have to be sure regulators are quite comfortable that they can monitor, supervise, and audit all the transactions easily and reliably, regardless of how complex the technology is. If we come to the regulators trying to explain to them artificial intelligence and blockchain, this and that, we are creating a gap between regulators who know and regulators who don't. We are creating this wall or fog that, oh, you don't understand. This is very complicated. It's beyond your specialty. So leave it to us. We will take care of that. No, this we have to be sure is never taking place. So of course we can have capacity building programs to IT specialists in central banks and capital market authorities and so on. But from regulatory and supervisory point of view, they have to be convinced that now it is easier to check for to apply anti-monetary laundering or anti-money laundering regulations and so on and so forth. Actually, the technology should make this easier, and they should be convinced that this is the case. So I think we have to be very careful when we approach the regulators, because if we put them off by the complexity of the technology, it's a losing game. The door is closed. So we have to approach the regulators that, look, the supervisory role is even easier. You have more control. You have better transparency. You have better governance structure. And of course, these fintech projects will bring in investors, will bring money, will bring revenues to the country. So we have to be sure how the message is built up. We have to really be careful in articulating the argument to approach and convince the authorities. Thank you very much.
Thank you very much, Dr. Sami. I think we discussed most of the recommendations. Now we can move to the Q&A part, the questions and answers, before closing the webinar. At the end, I'll give each of you 1 minute to have a closing speech for the webinar. But before we have some questions, well, I have the first question is for Dr. Sami Suwailan. Has the ISDB Institute a program to support member countries throughout fintech programs in the areas of capacity development and fintech infrastructure?
Thank you, Brother Ahmed. Thanks to the attendants who provide this question. Yes, we started this kind of programs of fintech capacity building programs, but we are, of course, we are reforming the whole range of activities of the institute to be in line with the directions of the Islamic Development Bank and the future that we think laying ahead for our member countries and for the Islamic finance industry. So the answer is yes, we did start this, but there is a lot that inshallah will be done in the coming months.
Thank you, Dr. Sami, but just to complete your question, your answer is that for the capacity building in fintech, it's a very wide area. I mean, when, for example, for instance, when talking about AI, for instance, artificial intelligence, there are many aspects that should be covered. First, the technical aspects. For example, you have to learn coding, you have to learn algorithms, mathematics. You have to revise or to review your mathematics courses at high school and at the university to have the algorithms. Then you have to learn the strategic aspects of how to insert AI in a business model. Then you have the ethical aspects. One of the most urgent and interesting things because there are AI in compliance with Sharia principles. So there are aspects, Dr. Sami, in order to provide those, I would say, those programs. So a question for Dr. Wael Aminu. What are, in your opinion, what are the contributions of the central banks in the fintech development in the Maghreb region? Do you have any answer for that question? Please.
Yeah, sure. There are many initiatives related to the sandbox initiative by the Central Bank of Tunisia. The Central Bank of Tunisia, and also in Tunisia, they have this program with us. The crowdfunding is one of the elements, and now we have regulations related to crowdfunding in the region. I think also one of the most important developments has been the payments companies, and we call them the mobile we have these regulations, especially in Morocco and Tunisia. And in Morocco, we have like more than 10 companies operating as like we call payments companies. You can have your wallet, you can pay, you can transfer money, and so on and so forth. So those are the most important. Yeah, and there are also regulations related to digital signature also, which is also important when it comes, especially when it comes to signing contracts, digital contracts. After COVID, also we had specific regulations on onboarding clients digitally without having this face-to-face for KYC. So this is that was also one of the consequences of the COVID crisis. I mean, regulators they brought some flexibility in terms of onboarding process for opening banking accounts and so on. So roughly those are like the current initiative. But as we mentioned in the report and also at the beginning of the webinar, we mentioned that we still have a long way to go. I mean, this is just one of the elements, and the regulations do not cover all aspects of fintech. For instance, when it comes to open banking, when it comes to like digital authentication, all those elements are not still covered yet. Cryptocurrency is also one of the elements which is not covered. Distributed ledger technologies. So we still have a lot of areas, a lot of gaps to cover in this regulatory environment.
Thank you. By the way, we still have a question for you. You presented during your presentation a fishbone with the challenges facing fintechs.
Yes.
The question is, which of these challenges comes up as the most problematic factor, in your opinion?
I think all of them are important, definitely. And in the report, we only focus on two sub-challenges or two sub-causes, as I mentioned, the sustainability development integration, and also fintech as a lever for this integration. But there are other challenges in the region, obviously. There are challenges regarding scalability, access to capital, regulations beyond green and social finance and fintech. There are issues also that we need also to fix regarding governance. So there are many issues that also that today prevent Islamic finance from reaching the full potential, and there is a lot of potential in the region. It's hard to tell what is the most like important cause or most important factor. Very difficult to say, but we're doing this. All of them are relevant. And we have to start by addressing those causes if we would like to have a strong development of Islamic finance beyond the double-digit growth that we are now accustomed to. But we don't care much about double-digit growth. We do care about the impact and about having Islamic finance fix the problems of people in a very concrete way.
Thank you, Dr. Wael. Brother Muhammad, Sawaf, I think people are visiting your website to understand more about Manzil. There is a question about Manzil. Is there any connection between Manzil and some Islamic banks in the Maghreb region or outside the Maghreb region to cope on or to import your model here in the
It's a very good question. We've been in many talks within the GCC region.
Brother Muhammad, if you can first explain what is your business model. It's a good opportunity to introduce it.
Absolutely.
Then to see whether it is possible to bring your model here.
Absolutely. So Manzil, alhamdulillah, is what we like to call the first Islamic neobank in Canada. We focus on the retail banking market. So our main product lines are residential home financing using murabaha and musharaka structures. We also have a wealth management suite of solutions using platform traded funds or exchange traded funds. both in halal fixed income and halal equities. And then, of course, our third product line is a halal prepaid Visa credit card solution, and many more products to come. So other retail products such as car financing, and halal wills and estate planning or wasiyas are all coming down the line. And we enable these products through a digital experience or solution, right? So we are a digital platform. We don't have brick and mortar branches as traditional banks would usually have. Everything can be done completely online. And so when looking at exporting this technology, of course, the focus really is can we align ourselves with a potential partner bank within a particular region that has already localized these structures, right? Because these structures are very localized, especially when it comes to tax, regulatory, and legal frameworks. We can't take our Murabaha or Musharaka product and bring it into the Maghreb region or the GCC region. We would have to use local structure. But what we can export is the technology, the user interface, the user experience, and the solution around how do we originate, underwrite, and fulfill all of these services and products. So we are in the region at least twice a year. We have many conversations around this, and inshallah, with everyone's du'as and prayers, there may be a time where we can partner with one of the banks to definitely export what we've put together, because we get requests from all over the world, mashallah, with respect to Menzel's products and whether those services will be provided outside of the Canadian region.
Okay, fine. So maybe one day you will change the name, Menzel?
The reason? Oh, change the name?
The brand name, yeah.
We like to stick with it because we see Menzel as the foundation, right?
Okay.
And even if you think about the word Menzel with other languages such as Farsi, Urdu, and Turkish, it actually means destination. So I think it's still appropriate, especially if we were to build a base.
Thank you very much, Mohammed. So I have a question for Dr. Sami Suwailan and Dr. Dalal about the CB, the Central Bank Digital Currencies. Well, the question for Dr. Sami is, what is the position of the Islamic Development Bank in relation to Central Bank Digital Currency? Everybody knows about all the project of the Dinar Islami and how CBDC can, what is the position, and if there are any researches or projects on that level.
There is no official position of the central bank. There are this problems finalizing or utilization of idle capacities within some of our member countries, and could complement the digital. There are many kinds of digital currencies, and we understand the concerns of the regulators. We have to be really very careful to be sure that what we are proposing achieve their objectives in a manner. It is not something that is their objectives, it's the other way around. All their objectives will be actually achieved, satisfied in a better manner. If we cannot do this, we better not to explore that.
Okay, Doctor, any additional comments on that?
Yes, this is a very interesting. Really, there are the CBDCs. I'm not aware of any per se in the region of like a digital currency that will be like operational immediately, because clearly, as Dr. Sami mentioned, that requires looking at various aspects. Now, how that currency will be accepted, will it be domestic or international? Also, what is the format of that currency? I think one of the current concepts, some hybrid models, or even some easier approach of implementing be at the local level. If we're talking jurisdictions either with dual banking systems or full-fledged, Islamic financial institutions, etc. But clearly there is still a lot that needs to be done by central banks in terms of assessing impact of introduced currencies. So when it comes to financiality and the impact on the whole financial system. Moving forward, because we've seen the in the past, in a couple of people also discussions about, for example, how cryptocurrencies are being accepted all, and we've seen central banks already some work when it comes to the regulatory and the impacts from a risk perspective when it's to financial stability. So it is not a straightforward per se discussion, but clearly there is a future for that, and we've noticed that specifically after the pandemic. And I guess Maghreb context, we have seen there are existing already a number of challenges before we could look at these BDCs, but currently at the global level, I think there are several groups, for example, looking into some regulations or easing frameworks for enabling the developments of common currencies or common digital currencies.
Thank you, Dr. Bilal. In fact, the CDBC, the first is initiated on CDBCs in Sweden, in England, but they have spoken by the Swedish central bank. They said 95% of the merchants in Sweden in 2025 stop accepting cash. Have different problematic. The Maghreb region in Tunisia, Algeria, and Morocco, when you visit a merchant or a shop, the first question you have: do you accept cards? Do you have a POS? In Sweden, it's the opposite. They are asking, do you accept cash? So these are different contexts, and we have to be very, I would say, careful when addressing this topic. So I think we still have 15 minutes. I would. There are some other questions, but maybe we'll have other webinars, inshallah, and seminars. We can discuss them in details. But now I need to move to the closing part. Well, maybe I'll give each of you 1 minute to have their final comments on the report and on the initiative. Maybe Elise first. Let me start with Dr. Bilal, if she's ready for that. Yeah.
Thank you, Dr. Ahmed. I think it was a very insightful discussion, and clearly there are a lot of challenges and issues to be addressed, but therefore there is a need for a clear roadmap and what we need to prioritize, and specifically in the context of the Maghreb. I think when it comes to both fintech, implementing also in terms of scaling activities of Islamic tax, and also on the other hand, sustainable, we should not lose focus on the development challenges of the countries. I'm talking in the specific case of Maghreb, but this applies to at the global level also. So the starting point should achieve, and what problems are we trying to solve? So it is not also only about mimicking what is existing in other countries, but rather leveraging on all the initiatives that have already been developed in the country. And clearly there are a lot of good initiatives to leverage on. But in the context of the national commitments, whether under the SDG agenda or the Paris Agreement on climate change, but also the additional challenges that were triggered by the COVID-19 pandemic. And you mentioned the number of these challenges, which is climate change, education, equality. I would add also food security and the health infrastructure. And we we see what is happening currently, for example, in Tunisia, where clearly there is an urgent need to redirect all, I think, financing to the health sector to support actually the population in dealing with the COVID-19 pandemic. So then from there, you decline these into strategies, dedicated strategies on how fintechs, what kind of fintechs and what type of sustainability initiatives would support these initiatives. And some focus areas, of course, as we mentioned during the discussion, is the legal and regulatory framework, access to talent and capacity building, collaboration, and I will still emphasize on the importance of collaboration between fintechs and banks because it's a win-win situation. And finally, we do need an engaged customer and investor base because without an engaged and informed, financially educated customer and investor base, it would be challenging to achieve these objectives.
Thank you, Dr. Dalal. Thank you. Now, Brother Mohammed, your closing word, please, if you have any.
Thank you so much. I think with respect to how we can look forward, I think the Islamic Development Bank, that Dr. Sami Swedem is leading, can play a very important role, not just among OIC member countries, but I think there is a role to play amongst non-member OIC countries. Because, when I think about the North American context, I think about the European context, especially in markets like UK and France, where they have, almost 10 million Muslims between those two countries. Same thing goes in North America. I think, ISDB can play a critical role amongst the government level to educate, inform, create partnerships that will allow Islamic finance and fintech to not only be created, but proliferate and thrive. And I think the constant, right, is the ISDB, because they're the ones that can bring everyone together. They're the ones that have access to, all of these initiatives across the globe. And I think there is a unification that can be created here. And, this is just the beginning of the reports. And inshallah, it's not just a report focused on the Maghreb region, but multiple regions across the world. And I'm sure that's in the works. And I think if there is this focus amongst non-OIC member countries, such as Canada, I think it would be welcome. I think the governments would welcome it. At least to have a working group to better understand the needs, for not only financial literacy, but Islamic financial literacy, and to move the Muslim population from being financially excluded into included. Because let's not forget that there are 1 billion people, or a population of 1 billion people that are financially excluded globally. And most of these are Muslims, unfortunately, because the banking system just doesn't allow for products and services and solutions that adhere to the religious principles of riba and so on and so forth. So inshallah, Dr. Sami, that could be a takeaway for you and your group, and we would welcome you here in Canada and North America generally to establish such partnerships that can definitely bring in the fold and bring these countries to better understand that Islamic finance can create economic activity and between financial authorities and regulators and
Thank you, Brother Muhammad. أسمعت سامي عنه إن شاء الله. Sami will this. But let's start with Dr. Wael. Dr. Sami at the end. Dr. Wael, if you have insight.
I'm really glad that we had this morning, and as Dr. Mohammed said, just inshallah. I think it's very important, as Dr. Dalal mentioned, is that social and economic and environmental challenge don't wait. They are here and they are getting compounded, unfortunately. So I think there is an urgency about that. We shouldn't forget. I mean, she mentioned rightly the example of Tunisia, the health healthcare crisis right now, but we have similar challenges in other fields. So I think we collectively we should take responsibility for those challenges, and then our position is that we need to lever in order to fix part of those challenges through financial institutions. Yes, we need a clear objectives, and there, but we need, I think, committed to the 2030 goals. So we have these macro objectives, but we have to have like more specific objectives, especially in the financial sectors, and in this case, education and the involvement of regulators is extremely important, as well as the financial institution in place. So hopefully this work would contribute to this, and we're looking forward, inshallah, to the next initiatives, inshallah. Thank you very much.
بارك الله فيك دكتور وائل. ختام مسك دكتور سامي تفضل.
Thank you very much, Rahman. Thanks to all colleagues and participants. Well, I have to respond to the call of Brother Muhammad. So I share, of course, with you, and we all share this concern. And definitely the Islamic Development Bank Group is dedicated to the OIC member countries. And when it comes to Islamic finance, it goes beyond our countries, as you rightly mentioned. However, it is very important to show, to prove that Islamic finance is viable by merit, not only by, it is not targeted to Muslims just because they are Muslims. We have, this is a responsibility, this challenge that we are yet to really meet this challenge, to prove practically and empirically Islamic finance, even without the label, provides more value to the general to the general population of our world. So this argument that Islamic finance is for Muslims and Muslims they cannot deal with interest-based financing, it is in general it's a valid argument, but that's not sufficient, because the logical consequence of this argument is that if we modify conventional finance to make it Sharia compliant, that's all we have to do to bring this $1 billion. Just make up the contract to be clear and to be look nice, and that's it. But that's not what we are looking for. So it is a challenge that we have to face, that we have to convince authorities in Canada, in the United States, in Europe, that this form of financing stands on its merits. It is viable by itself, whether it is targeting Muslims or Muslims. It is a system that is worth exploring. It is a viable system by itself. This is a challenge, and we have to accept that, we have to admit that we are yet to really reach this point. It is not that Islamic finance is not capable of doing so. It is capable of doing so. And after the crisis, it became very clear how the shortcomings in the financial system could destroy the economies. Now, you are financing men's houses. So how people in the United States were evicted from their homes because of these mortgage-backed securities, because of the CDOs, CDOs Square, CDOs Cube, and CDS, and all these fancy complex derivatives. So it's clear. I mean, the shortcomings of the system, of the main system, is very clear. And the leaders of the Western world repeatedly complained about these crying from a crisis just to get another crisis. So we have something to show to the world. True, we are addressing. It's not that we don't want to address Muslims. It is not that we want to hide being. No, we are proud, of course, of being Muslims. There is nothing wrong in showing that this Islamic finance system or arrangement or structure. But we have to convince authorities that this is a viable system by itself, even if you take out the label, even if you are talking to. Now, it will not appeal to everyone, fine. We are not saying the kind of arrangement will appeal to everyone. Just like telling people, you don't have to interpret, it is something not very good. This proposition does not appeal to everyone. Some people, whether Muslim or not, will like the idea. Some people will not. So the same thing, we are saying Islamic finance have its own merits. It would appeal to a reasonably good segment of the market, but that doesn't mean it has to appeal to everyone. And by doing this, we are telling the authorities, by accepting kind of arrangement, you are allowed to diversify the system, not only in terms of clients, bringing, also in terms of product appeal, non-Muslims as well. This is a challenge. That's one thing. And SDGs and science, there is a huge potential for synergy. Show that Islamic finance, the concept is viable. It is more valuable to the economy than conventional finance.
On that report. We'll share the recording, inshallah, as soon as possible. And I'd like to thank again the partners that contributed in this report, Umnia Bank, Yusra Bank, and ITS. And of course, this is just the open webinar. We still have a lot of other actions. We'll discuss in webinars or seminars depending on the pandemic situation. In the case of every country, isolated others. And will be part of those actions, and we'll move forward all together. Thank you very much, and see you soon, inshallah, and have a good Eid Adha, inshallah. MashaAllah. Barakallahu feekum.